America decides on its next president and Congress, and the stock market off to the races. Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Foe.
And I'm Bonnie Quinn, and we are kicking you off to the closing bell here in the United States. Let's take a quick look at where we are markets-wise. The S&P 500 well on its way to its 48th record this year. We have 1 hour to go. We'll see if it makes that on a closing basis. The Russell is catching up. Of course, J.D. Vance and Donald Trump's policies potentially more friendly to small business, and that has the Russell up 5.5% today. The 10-year yield up 15 basis points. Treasuries plunging off the back of the news. And look at Bitcoin trading very close to $76,000. That's a record for Bitcoin as well, Scarlett.
So, Bonnie, this is the Trump trade erupting across asset classes. You mentioned the S&P 500 scaling new heights, rallying the most in almost 2 years, led by financials and energy names. And that's an optimism. The newly elected president has a clear mandate to enact pro-growth policies focused on corporate America through a cocktail of lower taxes, deregulation, and protectionist tariffs. Treasuries resuming their sell-off, pushing yields to multi-month highs as the outlook for faster growth invites more inflation and debt issuance, all of which threatens to upend the Federal Reserve's careful policy calculus in the coming months, and renewing questions over how much the incoming president may pressure Fed Chair Jay Powell to keep cutting rates when many of Trump's campaign promises are expected to put upward pressure on prices, wages, and the federal deficit if enacted. Now, an election and Fed meeting all happening in the thick of third quarter earnings season, with several names out after the bell, including chip sector companies ARM Holdings and Qualcomm, as well as ride-share service Lyft. Bonnie?
Scarlett, before we get to those quarterly earnings, let's turn back to the results from the presidential election and what it's like in the battleground states the day after. Michigan's 15 electoral votes went to Donald Trump and was one of the last states the president-elect needed to win to sweep the blue wall. We're joined now by Bloomberg's Romaine Bostick in the city of Detroit. So, Romaine, have you had a chance to walk around and chat to some people today? Is that the mandate that they wanted, that Donald Trump should be the next president of the United States?
Yeah, it was an interesting battle here in the state of Michigan. Of course, I am in Detroit City, which is a Democratic stronghold, a stronghold that Harris, of course, won by a relatively wide margin. But what happened on the periphery of this city, the periphery of this county, really tells the story not just of her loss in Michigan, but of her loss of the key battleground states, whether it be Wisconsin, Pennsylvania, or the others. And it all boiled down to this idea here of which types of voters that they were courting. Kamala Harris really moved to the center, really tried to court moderate voters. She really tried to court women voters as well, particularly on the key of abortion. Meanwhile, Trump spent a lot of time in this area as well, but he focused a lot more here on some of the hot button issues: immigration, foreign policy, the war in Gaza, issues that resonated with a lot of voters here. And he was able to siphon off a lot of votes that, at least in 2020, went to the Democratic candidate, Joe Biden at that time, siphoning them off from Kamala Harris here. And that's despite the fact that the Kamala Harris and the Democratic campaign had a huge fundraising advantage, not only here in Michigan, but quite frankly, nationwide.
Yeah, absolutely. And you had told us about how much money they had spent in the state and how often the campaign visited the state. With all the extra money and attention spent by Democrats, why didn't they see stronger results? What are you hearing?
Well, two of the big refrains that came across a lot with regards to Harris was a lot of folks felt that that she was not listening to their concerns, particularly when it came to some of those foreign policy issues. The other big issue that a lot of people voted on, particularly here in the state of Michigan, was on manufacturing jobs and, of course, the state of the automotive industry. Remember, this was a weak spot. Economic issues was a weak spot for the Harris campaign, not because she didn't necessarily have a plan, but because she didn't necessarily articulate that plan, something that Trump, in his own particular way, did manage to do with a lot of voters here. And you're seeing that in some of the exit polling done by CNN and done by some of the local groups here that showed that a lot of voters went into that ballot box and they made their choice based on that.
For that state in particular, Romaine, and you referred to it just a moment ago, the Arab American, Muslim American vote was very important. Do we know what happened to that vote?
Oh, I mean, Harris could not keep it at all. In fact, this was probably one of the more dramatic evidence in this race here. Take a city like Dearborn, Michigan. More than 40% of that population identifies as being of Arab descent. You have Dearborn Heights also has a large population of Arab and Muslims, and Hamtramck, which is a majority Muslim city. These were all cities that went for Biden overwhelmingly back in 2020. not only did Harris lose 2 of those cities, but she lost more than double-digit percentage points from what Biden had back in 2020, and that's a huge deal. We should also point out that the mayors of those 3 cities, all of whom endorsed, the mayors at the time, all of whom endorsed Biden back in 2020, the mayors now in those 3 cities did not endorse Harris at all. 2 of them endorsed Donald Trump, and 1 of them abstained from voting from endorsing anyone at all.
Yeah, that's a big tell now that we look at it in retrospect. Romaine, fantastic reporting on the ground there. Romaine Bostick joining us from Detroit. We'll be checking in with him in the next hour. The big picture here, of course, Donald Trump's victory at the ballot box unleashing yet another record-setting ready for stocks. But if you look at 2 Goldman Sachs indexes that follow investments tied to Democratic and Republican victories, they've been vying for dominance since Harris announced her presidential candidacy. The basket linked to a Trump win started to fade as October came to an end, and the one linked to a Harris victory began gaining momentum. Now, of course, you see the opposite with the Republican basket spiking while the Democratic counterpart slumping. Here now to discuss the overall market outlook is Callie Cox. She is Chief Market Strategist at Ritzholtz Wealth Management. Callie, good to speak with you. So you look at the market reaction today, stock market reflecting jubilation, optimism, the bond market, alarm. How would you characterize this reaction to the election outcome?
Saying your clients is, this is what happens when there's a lot of uncertainty. People brace for the worst, and then they breathe a sigh of relief. I mean, the S&P is up about 2.3% today, which would be the strongest post-election day reaction we've seen since my data started in 1950. People are definitely reacting, maybe celebrating, maybe bracing for more after, what we saw last night. And it seems like there's going to be a lot of change underfoot. I mean, what we're looking at right now is a Republican sweep across the Oval Office in Congress. So these policies that have been talked about for months now could actually happen given the makeup that we could be seeing in Congress.
Yeah, and you note that the market's first reaction to this Trump presidency 2.0 has been to believe everything. How long does this last, given the lofty valuations we have in the current market?
Well, we have to remember the Fed is tomorrow, so there's always something that's going to distract us. I mean, one thing to think about, too, is that, markets tend to have knee-jerk reactions to emotional events. And I think we could characterize this as an emotional event, at least based on my social media feed. But the knee-jerk reaction isn't always correct. And Scarlett, I think that the market may be overlooking some of the risks that come along with these policies. First of all, we don't know if Trump will be able to enact most of them, although, I mean, we could go down the list one by one and talk about all the policies that he's thrown out there. But also, and I think the bond market is considering this a little bit more than the stock market, but, we see risks and trade-offs to consider here. It's not just, gangbusters growth, that means everything goes up. I mean, you're even seeing break-evens today showing that there is the risk of higher inflation. So, the knee-jerk reaction isn't always the right reaction, and we're worried this might be the case this time around too.
Yeah, because even the time involved, Callie, right? I mean, there are 2 months before even the inauguration happens, and it's only at that point that he can even sign executive orders or whatever he might be able to do quickly, and that's not suggesting that he's going to carry out any of this via executive order. Could the market, though, continue to hold on to these highs for that lame duck session?
Whenever I'm confused by the headlines, Vonnie, I like to think back to fundamentals. And I think any analyst on Wall Street will tell you that. I mean, right now, the job market's weakening. Of course, this election could change things in the way of policy, but there is still a lot of good things going for the market at the moment. I mean, we're telling clients to still prepare for a drop here because, of course, if the job market does continue to weaken, then we could have some issues on the unemployment side of the house. And bonds, I think, could still act as good portfolio protection. I know rates are a little bit higher, but we're urging clients not to think of them as these income generators that they've seen over the past year or so. So, I think the fundamentals point to what could be a higher market ahead. Then again, I mean, the market's up 2.4% today. Things look a little frantic, and in frantic days, you see big up and down moves.
Callie, how does the election of Donald Trump change the risk-reward profile when it comes to geopolitics?
Well, that's a really good question, and I'm not sure anybody can answer it really well right now. Obviously, there's a worry around a lot of global unrest. I mean, we've all heard Trump talk about his, geopolitical stances and his excitement around, maybe enacting tariffs if he's able to, maybe supporting some areas of the world over others. The word that comes to mind right now is volatility. And I think a lot of investors are trying to, run through what that volatility could mean for their portfolios. I mean, I think you have to watch oil, you have to watch gold. Of course, you have to watch the bond side of the house because volatility leads to uncertainty, and uncertainty is best cushioned by, some of the strongest government debt that you can get from the government of the world's reserve currency. So, we just tell our clients to consider all of these pieces of their portfolio and to be prepared for a wide range of scenarios.
At what point, Callie, does the rise in bond yields, and John Authors of Bloomberg, he writes a newsletter here, characterize it as an epic move in bond yields. At what point does that snuff out the rally in stocks?
I would also characterize it as an epic move in yields. I mean, have you seen the 30-year yield today? Pretty crazy. It's a good question. Right now, I think the 10-year yield is way too high given where the economy is. If you consider that break-even rates are around 2.5% right now, that implies a 2% percentage point premium between where the 10-year is and where expected inflation is. And that's really wide historically. So bond market investors are thinking about a lot of factors right now, and I'm not sure all of this uncertainty will stick around, especially if, say, we get some more moderate context from the Fed tomorrow, or if we get a more downtrodden economic report. So, we're still telling clients, rates are coming down. The Fed does have an argument to cut gradually. The risk is to the downside in the economy right now. So just consider that as you watch yields spike in this knee-jerk reaction.
Callie, thank you so much for your time today. Much appreciated. That is Callie Cox, Chief Market Strategist at Ritzholtz Wealth Management. Bank stocks soaring after Trump's win. Investor optimism riding high on the hopes that Trump will pull through on his promises to lower taxes and reduce regulation for the industry. Joining us now to discuss is Chris McGratty, Head of US Bank Research over at KBW. Chris, thank you so much for joining. So he has promised it. He has promised that for every 10 regulations, he'll reduce that down to 1. Will he follow through on those promises, Chris?
Sure, thanks for having me back. I would say regulation is what's driving a lot of the bank stock outperformance today. At KBW, we've looked a lot about regulation. We've talked a lot about it with clients, and we think there could be upwards of 8 changes to the leaders in the regulatory bodies under a Trump administration. And I think that's providing a boost to sentiment, in particular, sentiment around M&A.
So what would have to happen? Would Lina Khan have to go, for example?
So I think there's a lot of changes. It's still early. The individuals that need to be changed and what they can change initially will be something that's certainly fluid. I think the focus as an investor, as an analyst, is really on bank M&A. The ability to close a deal, announce a deal, close a deal in the time frame that you communicate to your shareholders is very important. We've seen a lot of recent deals act better. The stocks have acted better, and the expectation is those deals, while small, will close on time. And going forward, as you go into 2025, whatever changes might be, there is a building optimism that we haven't had consolidation occur in a meaningful way, and the industry is really ripe for it.
Wait, you're talking about consolidation within the financial industry or consolidation M&A overall, and the banks being able to profit off of advising on that?
I'm specifically talking about banks, one bank buying another bank. There's still 4,000 banks in the country. On average, we lose about 4% of the banks in any particular year. That's been a lot slower over the last couple of years as the regulatory burden has increased. So we think there's a pent-up demand. There's a lot of capital building in the industry. There's limited growth. And one of the ways to grow earnings per share is to merge with another bank. So we think bank-to-bank M&A will certainly be a tailwind. We also think broad corporate M&A activity through the investment banks will be something that happens in 25.
Yeah, and a little more clarity on that as opposed to this idea that people just don't even want to propose deals because they'll just get basically shut down on it. What about capital rules? We saw that the chair of the Senate Banking Committee, Sherrod Brown, lost to his Republican opponent. What does that mean in terms of tighter capital rules for the financials?
We've seen capital standards really increase since the banking crisis and since the financial crisis, if you want to go back 15 years. So in periods of crisis, there's generally an overreaction to regulation. What's been encouraging there's been walking back of some of the proposed regulations related to Basel III. Certainly, there's going to be more regulation that occurs. But on the margin, under a Trump presidency, we saw this after 2016, some of the rules around asset sizes and M&A activity, those got relaxed. And as that happens, there's more there's positive consequences for capital returns with buybacks and dividends and M&A. But overall, the burden on financials is great, and it should be great because they're held to a high standard. But we think they'll be walked back a bit.
Chris, what size of financial benefits most? Are we talking community banks? Are we talking the large bulge bracket firms?
It's a good question. One of the groups within the banks, the $50 to $100 billion banks, is a really interesting subsector of the financials and the bank industry in particular. And so what we've seen since the start of the year, remember when New York Community got into issues, part of it was because they had crossed that $100 billion and they became subject to greater regulation. Over the course of most of this year, and we've done a lot of analysis on this, the stocks in the 50 to 100 billion in asset camp were dislocated from what their return profile was. Meaning, if you applied the same standards, the market should have been paying a 10 to 15% higher valuation for these companies based on the return outlook. And regulation was the culprit. Now, over the past 4 or 5 months, as the market began to price in Trump, that discount has narrowed. And in particular, it's trading in line with where it should be. Now, there are exceptions. And one bank I do want to mention is Webster Financial, based in Connecticut. This is a bank that is a mid to high teens return on equity bank, but the stock still trades for 10 times earnings. And if you look at it relative to historical multiples, this is one example, it's still trading 20% plus cheap to what it should be. So the group has worked, the group is moving today. We're within a couple percentages of where multiples have been over the past 7 or 8 years. But there are instances of the market, we believe, mispricing some of the opportunities.
Chris, how long would you give Gary Gensler at this point?
Well, I think that's I think it's going to be, time will tell how the Trump administration decides to make the changes. But again, our work shows that some of these changes can be immediate, and some of these changes may take time. It really depends on the policy, how it's enacted over the next several months.
All right, Chris McGratty, head of U.S. Bank Research over at KBW. Thank you so much. We are seeing the financials lead the way in the market rally today following the election of soon-to-be President Trump. Just some breaking news here out of Michigan, some more election headlines. Alyssa Slotkin, the Democrat, has defeated her opponent, Mike Rogers, Republican, in the Michigan Senate race, holding on to the seat that the Republican Party had aimed to flip. Slotkin has served in the U.S. House since 2019, and she will succeed Debbie Stabenow, who is now retiring from the Senate. We'll keep you posted on any further election headlines that do cross. In the meantime, coming up, we're going to take a look at pharmacy retailer CVS shaking off investor concerns on the back of some positive quarterly results. We're going to get more in our top calls. This is The Close on Bloomberg. It's time now for our top calls to look at some of the big movers on the back of analyst recommendations. And we're watching shares of CVS, the health and pharmacy retailer having a banner day, up 12% right now after a positive third quarter earnings report. However, the new CEO, David Joyner, didn't really offer investors any financial guidance for 2024 or 2025. So let's get some more perspective on this and bring in Elizabeth Anderson. She is Senior Managing Director covering healthcare technology at Evercore ISI. She has an outperform rating on the shares. So how do you read this advance in CVS shares today? Is it a reflection of the broader rally, or is it in response to what CVS did disclose?
I think there's some of each going on today. You've definitely seen a broader rally in managed care stocks like Humana, United, also up on the back of the Trump victory last night. Republicans are generally known to, or thought of as being more positive towards Medicare Advantage, which is a key business line for all of those companies that's really struggled this year on the back of higher utilization by seniors, so more seniors using healthcare as well as lower rate increases. Republicans are generally thought of as increasing rates higher than that. If we look at CVS particular, as well as that, we saw a couple of things. One, we got the first sort of public speech from the new CEO, right? He laid out a vision. They laid out sort of a conservative look for the fourth quarter, didn't give official guidance per se, but kind of just said, we're going to assume that things continue the way they are and don't actually improve, which had been sort of a key problem previously in that. And the pharmacy business and the PBM also did better. So, I think there was a lot to look at it from that perspective.
Okay, but the company didn't get any guidance for the full year or for next year. How concerning is that, Elizabeth? What does it signal about how CVS moves forward with assuaging concerns of Glenview, the activist investor?
Yeah, absolutely. So I think part of the problem was this year, the company under the prior management CEO had given guidance repeatedly, right, and failed to meet those expectations. So I think there was a little bit of a credibility problem in terms of giving guidance. I think that the new team coming in and saying like, hey, you're right, this hasn't gone super well, and there are issues with this. We're taking a more conservative view. We're taking reserves. Those kinds of things really puts a sort of line in the sand and says like, hey, we understand that the market out there is volatile, and we're willing to acknowledge that and sort of put that as a line out there before we talk about what we're doing internally to improve that going forward for next year. But, I think David's been CEO for 3 weeks, and so I think he wasn't quite willing to put his stamp on it yet. But I assume as we get later in the year, we'll certainly get a little bit more perspective on what's going on. And the company talked about providing 2025 guidance on the fourth quarter call, which is sort of their normal cadence, which is fine. They did give some broader headwinds and tailwinds too, which is helpful from a modeling perspective.
Elizabeth, have you started to think about the possibility that Robert F. Kennedy Jr. might be put in charge of healthcare in any kind of way, and how would you model that out?
Yeah, I mean, that's one thing that we've heard. I don't know, in terms of, we'll wait till we get the formal appointment, maybe before opining on that formally. But, I think people have a lot of questions under what the new administration will look like. I think that will be an important part for healthcare policy. I think it's also important to understand who goes and is head of CMS and takes a look at sort of the Medicare Advantage rates. I think that's going to be the key thing that investors are really looking at as we think about how the managed care stocks in particular are going to look for 2025.
I mean, is it important to know who is going to be in that role before we even start thinking about investing in healthcare?
I think for those I don't know if that's fair for healthcare more broadly, because I think there are a lot of other portions of healthcare that maybe aren't as subject to some of the risks. We've seen investors been very enthusiastic about the clinical laboratory companies on the back of that, of sort of not being in sort of the policy crosshairs, the drug distributors in general. So I don't know if all of that's fair to say for all of healthcare, but I think it would certainly be helpful from a managed care perspective to have a little bit of more sort of flesh on the bones, so to speak, in terms of the Trump policy there.
Elizabeth, Trump 2.0 is seen as positive for M&A in the healthcare sector overall. But when you talk about CVS, it's not going down that road anymore. And in fact, that idea of building out this healthcare giant with all the vertical integration has not worked out very well for CVS.
Yeah, I mean, I think they've definitely hit some road bumps on that front. And I think when you have a company like that, what you'd really like them to do is to kind of take a step back and consolidate and fix the core business, right? If you get M&A in a particular environment, sometimes that can be distracting to management. They have to work on integrating it. There's a lot of stuff going on with the core of CVS right now. And I think investors are really focused on the new management team that's come in, really stepping up to fix that, and then, cross that next bridge when we get to it.
So within the healthcare space, which kinds of companies are you most bullish on right now?
Well, as I said, I think some of the managed care companies we've talked about, the drug distribution companies, I think we've seen increased utilization by seniors on prescription drugs, and I think that's a nice continuing thing. So companies like McKesson, companies like Cencora, I think are make a lot of sense there. Those companies have also been a little bit acquisitive, right? So that's something potentially helps with the new environment. And I think to your earlier point on managed care, those companies outside of CVS have also been fairly acquisitive, and that's something that we probably expect to continue on that front.
Elizabeth, thank you so much for your time today. That is Elizabeth Anderson over at Evercore ISI. Much appreciated. And Scarlett, we were speaking with Chris McGratty a few moments ago about how Donald Trump might have an impact on, banks merging and how it might be a friendly impact. Well, somebody is weighing in on another area where Donald Trump might have some kind of an impact on mergers, and that's Rory McIlroy, the Irish golfer. Yeah, he thinks that he could perhaps bring peace to the Saudi Arabia Live Tour PGA matchup. I
love this story because it kind of ignores the fact that he had a very particular stance on the Live Golf versus PGA Tour, at least in the beginning of their rivalry, and now has looked perhaps taken on a different stance.
Now he's on the negotiation team and it all looks a little bit different. But he thinks Elon Musk is going to help with it, which is even more interesting.
Elon
because
Musk in golf?
Exactly. He thinks that Donald Trump and Elon Musk together will be a great team.
Politics makes for strange bedfellows, gotta say. All right, coming up, tomorrow's Fed Day, but the big question is, what's going to happen with Jerome Powell? This is The Close on Bloomberg. It's just about 3:30 p.m. in New York. This is the countdown to The Close. I'm Scarlett Fu.
And I'm Vonnie Quinn.
And we have half the country in mourning, half the country celebrating, and the financial markets are looking ahead to the Fed meeting that's taking place right now.
It's a big question, and I'm sure it's on Federal Reserve Chair Jay Powell's mind as well as he enters the Fed meeting today and tomorrow, because of course President Trump most recently didn't say he'd fire him, but he had in the past expressed a little bit of discomfort with him, let's say. So with that meeting, that's Jim Grant laughing. We're going to get to him in a second, but first we want to get to our reporter, because as Scarlett was saying, the Federal Reserve has kicked off its two-day policy meeting and questions are being raised about the policy calculus in the months ahead. Let's get to our reporter now, Amara Omeokwe out of Washington, D.C. So Amara, how does this all play out in terms of the Fed trying to engineer a soft landing? The president won't even be president-elect for another little while, and he won't be inaugurated until January.
Right. So I think in the short term, it doesn't really change the calculus. The Fed is widely expected to cut interest rates by a quarter point tomorrow. But looking ahead, Donald Trump's win does raise some new questions for the Fed. He has proposed economic policies that would curb inflation, curb immigration, perhaps do mass deportations. He's talked about using tariffs more aggressively against some of our trading partners. Those things, at least at the margin, could put upward pressure on inflation, according to many estimates. And that would come, of course, as the Fed is still trying to secure this soft landing, trying to bring inflation down to its 2% target while protecting the labor market from any sort of downturn. So any upward pressure on inflation could complicate the policy path for the Fed ahead.
And that's just on policy. What about just his approach overall to the Federal Reserve? Do we presume that he's going to follow the same playbook he did during his first term and apply lots of pressure, at least publicly, to try and bring the Fed to heel?
That's another big question now that Donald Trump has won the election, because during his first term, we did see him put a lot of pressure on the Fed publicly. He often criticized Fed Chair Jerome Powell. And during the campaign season, we saw him raise some questions about whether the president should have more of a say in setting monetary policy. And that would really sort of upend sort of a decades-long tradition of the Federal Reserve being able to set policy independently of the executive branch. So I think that's a big question. How will he approach the Fed? Will he take sort of an aggressive posture towards the Fed? And could he do anything to sort of threaten the Fed's independence? Some of Trump's economic advisors and those in his orbit have pushed back against that idea. They've said, look, Trump just wants to have the ability to express his opinion about interest rates, where he thinks interest rates should go. He wouldn't try to do anything to try and curb the Fed's independence. But I think there is some speculation that perhaps he could try, or at least put the Fed in an uncomfortable spotlight if the Fed isn't doing what he thinks they should be doing.
Well, that's just it, Amara. He does have the opportunity to influence the Fed potentially through appointments. Tell us what appointments are on the calendar going out through maybe 2026 and beyond.
Yeah, so that is going to be the most direct way that Trump can really put his imprint on the Federal Reserve going forward. The key one is in 2026, when Fed Chair Jerome Powell's term as chair is up. Trump has already said that he will not reappoint Powell to that position. So that's going to be the key one. We also have Fed Governor Kugler. Her term is also up in 2026. So he'll have the opportunity to appoint a new governor there. And then Powell's term as governor is up a little later in 2028. So he'll have another opportunity to appoint a governor there. So some key moments in the coming years to appoint key personnel.
All right, Amara Omeokwe with Bloomberg News in Washington. Thank you so much for setting the scene there for us now that Trump has been elected president and will, of course, become inaugurated on January 20th. 2025. All right, let's get more insight now on tomorrow's Fed decision, because they are meeting right now with Jim Grant. He is founder of Grant's Interest Rate Observer. And Jim, we certainly do want to get your take on Trump and what kind of interference he might enact with the Federal Reserve. But I do want to get your thoughts, first of all, on how the Fed kind of moves forward right now, given that they need to think about inflation expectations as well. With this idea that inflation expectations need to be managed, they know that the president-elect is going to pursue inflationary policies that's going to drive growth higher and perhaps speed up inflation as well. Should the FOMC guidance even suggest caution about further rate cuts?
Well, I think the less the Fed says in general, the better. I'm all in favor of silence and very little of that.
What will he fill with the press
The
conference?
Fed has this bee in its bonnet that inflation is somehow derived from expectations, which is a new thing in the history of economic thought. And I'm not certain that they know exactly what the Trump program will deliver to us. It's possible. I mean, indeed, on its face, it seems as if it were inflationary, right? There is one, at least, bipartisan consensus in American politics, which is the deficit does not matter, and the public credit is immaterial.
Do you agree with that?
No, but both leading candidates. I was afraid one would be elected with regard to fiscal. So both leading candidates were in agreement that nothing was to be said about public debt. And I think that sets the tone for fiscal policy to the Trump administration. You know, the Trump administration has, at least on the stub, was in favor of a weaker dollar. And President Trump, an old real estate promoter, loves low interest rates. And that plus promises to cut everyone's taxes as close to zero as is reasonably and decently possible, doesn't in fact suggest there'll be inflationary pressures. Now, that inflation in the past has, well, at least in the infamous episode of the 70s, was often declared over and done with, only to surprise with another flare. You know, it's like
all it took was a pandemic.
Well, at the time, it took, this is in the 1970s.
Oh, yeah, I just jumped ahead to 2020s.
Yeah.
So, Jim, this move that we've seen in the yield curve, how long does it last? Is it reflecting what's going to be happening in the country, or is it just some short-term blip?
Well, the yield curve is the sum total of the knowledge of the future of people who trade and invest in bonds for a living, which is to say, it is the collective expression of the collective ignorance of well-informed people. So the yield curve has often been held up as some sort of fount of oracular wisdom, but no, it's as human in creation as is, for example, the money supply model. It's as human as there was a great to-do about the negative slope of the yield curve and for more months than had ever been on record without a recession immediately following. Well, that model has been retired and given a decent burial.
Jim, briefly, you laughed when we said that President Trump was a little discomfited by the Fed chair. Does he replace him?
Yes, he will replace him. I mean, I would like to say that with respect to the Fed and with regard to the president-elect or president-re-elect, that he is not the first Fed chairman to be a Batinsky with respect to the central bank. Andrew Jackson actually destroyed a forerunner to the Federal Reserve in the 1830s. Harry Truman leaned on Chairman Thomas McCabe in the late 1940s. Lyndon Johnson leaned heavily on William McChesney Martin in the 1960s.
Right.
President Nixon on what's his name in the 1970s. So President Trump is different in many respects, and circumspection is not his principal excellence. And he just says what he's going to do. He's like, in that regard, he's a little like Andy Jackson. Andy Jackson said, I'm going to kill the bank.
Jim, we'll have you back.
And Donald Trump says the central bank is composed of idiots.
We will have you back when it transpires.
I'm
Jim,
done for
thank
now.
you. Jim Grant, founder of Grant's Interest Rate Observer. And coming up, shares of Tesla taking off. We'll discuss what Trump's return to the White House could mean for one of his biggest supporters, Elon Musk, during today's Stock of the Hour. That's up next. This is The Close on Bloomberg. Shares of Tesla up nearly 15% on the heels of Trump's victory. No billionaire did more to help Donald Trump win than Elon Musk. And now we'll see if and how that pays off for Musk's companies, including Tesla and, of course, SpaceX. With us to discuss is Bloomberg Technology co-host Ed Ludlow. So, Ed, it's not just as simple as proximity to the president, is it?
Not as simple as just being by association, right? Musk with Trump and the stock being up 15%. It's largely a trade based on the idea that from a policy platform perspective, if Trump were to repeal some of the provisions of the Inflation Reduction Act, or what's legislated for in terms of consumer-facing EV credits, or provisions and funding that's available to the manufacturers in the EV space, who is most likely to benefit and who's most likely to be hit hardest? And those hit hardest wouldn't be Tesla. The calculation the market's making is that Tesla has scale, it has pricing power. And so in a world where those incentives were removed by the Trump administration in the new year or whenever it happens, Tesla could stand on its own 2 feet and sort of take advantage of that overall negative situation for the market.
Yeah, it's got the first mover advantage that it can rest on. So, Ed, right. There's been a lot of talk that perhaps Elon Musk might be tapped to serve in a Trump administration. Wouldn't that be a negative for Tesla, the company, and therefore the stock?
It's a really excellent question. It's probably the only question at this stage. Overnight, I wrote to the boards of both Tesla and SpaceX and just asked the question. Have you met about this? Have you discussed what will happen? Will Elon Musk retain his role at SpaceX and Tesla, let alone all the other companies at the helm of? Neither of those boards or any of its members have replied to me. I'm sorry about that, Scarlett. But I think what I'm hearing from sources is that this would be advisory, right? It would be an informal role that Musk does, rather than President-elect Trump sending up some kind of new federal institution or government body that's literally called the Department of Government Efficiency. If that were to be the case, then we don't know the answer, but you'd expect questions would need to be asked about whether Musk could maintain or legally be allowed to have the role of a public company CEO.
Yeah, I mean, he said on the campaign trail that he could take $2 trillion out of government spending, right, Ed? I mean, are we looking at something like what he did at Twitter in that case?
Yes, well, you will have seen overnight that Musk posted an image, seemed to be AI generated or superimposed, of him holding a sink in the Oval Office, a reference to a similar post he made after completing the Twitter acquisition with the caption, "Let that sink in." So maybe that's analogous. But remember as well, like, there's a policy discussion here. Yeah. What did Musk say on Tesla's last earnings call?
All good points. Bloomberg's Ed Ludlow, thank you so much for giving us the latest here on Elon Musk and what happens next at the helm of Tesla. Tesla shares, nevertheless, surging right now. Coming up, we're going to count you down to the closing bells. Dennis DeBusschere is president and chief market strategist at 22V Research. His take on the Trump rally. This is The Close on Bloomberg.
Markets tend to have knee-jerk reactions to emotional events, and I think we could characterize this as an emotional event, at least based on my social media feed. But the knee-jerk reaction isn't always correct. And Scarlett, I think that the market may be overlooking some of the risks that come along with these policies.
That was Callie Cox, Chief Market Strategist at Ritzholtz Wealth Management, kicking off the show. She talks about maybe the market overlooking some risks. You don't really see it, at least right now, in the equity market.
Absolutely not. We are on our way to a 48th record for the S&P 500, at least if these levels hold for the next 10 minutes. And then the Russell 2000 also trying to play catch up. We're up almost 6% in the Russell, well, 5.85% right now. As you can see, we had bonds plunging and that 10-year yield up 17 basis points now at 444. And Bitcoin is trying very, very hard to get to 76,000, but it's already at a record. Just off the back of that, I want to mention Coinbase up 30%.
30. All right. Well, that is quite the market check. And so let's follow up with a common conversation with Dennis DeBusschere. He is president and chief market strategist with 22V Research. Dennis, you heard Vonnie kind of give us the scorecard on the day's price action. You could say the stock market is reflecting some jubilation over a pro-growth government. The bond market, is that reflecting optimism or alarm, given the sell-off that we're seeing here?
Well, so far, the bond market seems reflecting a better growth outlook. Clearly, if, say, fiscal expansion was an issue, you'd have expected inflation rates significantly higher. Bond yields probably a lot higher than there are today. I would say going into the event, the big worry was like above 450, 455, especially on 10-year yields. You might not see this type of market reaction if you had a really big increase in 10-year yields. So you're not getting that. Inflation expectations relatively stable. Oil prices obviously stable. They were much lower earlier, which says that most of the move is on a better growth outlook versus an inflation scare, which is positive.
Okay. Thank you for explaining that. So when it comes to bond yields, is it the level or the rate of change in moving higher that would indicate that there's alarm over the rising debt levels?
Yeah, that's a very good question. So I would say a little bit of both, but in the short term, if you had a move, say over the next week to like 460 on bond yields, that would be an issue because that would be a severe move in a short period of time. You go to 4.6 over the next 2 years just because growth is really strong. I'm not saying that's the case, but if you did, then that's not an issue. So it's a little bit of both. And I would say the level is important because at the 455-ish level, I'm giving you a false sense of precision, but let's just go with it for a second. At that level is when you've seen some pressure on the housing market over the last 2 years. So that's why it's a focus.
Dennis, the Fed started its meeting today knowing who the next president is going to be. Even if it doesn't change the calculus for November or December, does it change the calculus for next year? JP Morgan already changing their outlook for a quarterly basis, quarter basis point cut from March next year because it's going to be President Donald Trump.
Yeah, I'm not so sure. I mean, it really depends on tariffs. I mean, it doesn't look like you can get a fiscal expansion. You're just not going to have the votes to do that. So if you do enact tariffs that are clearly inflationary on a one-year basis, so price level adjustment higher in an economy that's pretty strong, then I think odds are that the Fed would probably pause. Now, we don't really know how severe the tariffs are going to be, and it's particular to that potential 10% across the board. But if that were to be implemented, yes, you would see a Fed that's probably highly likely to pause next year. But we'll see how that plays out. Leaving tariffs aside for a second, what happens with the Fed funds rate is going to depend on core inflation, and that's going to be driven by underlying demand growth, wage growth, et cetera.
Yeah, the next data points. Dennis, I do want to ask you about geopolitical risk and how this all changes the calculus, because we have somebody who has, a very different outlook on how America should be placed in the world.
Yeah, I think geopolitical risk, unless it's an event that clearly leads to a negative economic shock, tends to be fades, right? I'm not sure that that's necessarily the best thing for society, but for the market, I would just say unless there's going to be a geopolitical shock that leads to, oil prices at 115 or above or something, or tariffs that are so onerous that inflation just goes up much more meaningfully than anybody's forecasting. Outside of those factors, I would fade focusing on geopolitical as a reason to be negative. I'd focus much more on the potential for inflation to be higher. And if we don't get that higher inflation, the market, the economy is going to be just fine.
Okay, so that's what to watch out for in the medium term. In the immediate term, I'm looking at the VIX coming down quite a bit from above 20 to 16.5 at the moment, although we have seen the VIX show more elevation since the start of September, averaging about 18.9 versus 14.5 in the first 8 months of the year. What does volatility like going forward until the new president-elect becomes president?
I would expect the VIX, both on a front month basis, which you just pointed out, and the entire curve to be around current levels, which would be consistent with a normal economic expansion. Like around the 16-ish level is what is typical, and we've done a lot of research on this, of the current type of economic environment where growth is running 2.5% and inflation's around 2% on core. And I think the large decline in the VIX post the election is very simply that we got through it. Some people might disagree on, how happy they are about this, but just the fact that we got through it, we actually know the results is a big part of the reason why we've seen that significant decline in the VIX.
What about the dollar? I ask this because I wonder how much other governments can do to shore up their own trade policies before the new president-elect is sworn in?
Yeah, so I think the dollar acceleration, which you're obviously clearly seeing, might have some issues for the rest of the world. We seem to be very good as a country as exporting financial conditions, not really importing them. So what I mean by that is it's clear that a dollar that is higher, interest rates that go up could have some negative consequences for the rest of the world. But if the dollar is going up because economic growth is strong, that also benefits a lot of countries. So I don't want to get too carried away with the dollar strength. That's one. Two, if you'll allow me quickly, the dollar going up does potentially limit how high potentially rates go, because all things equal, dollar higher equals lower inflation. So that's maybe part of the reason why the U.S. Treasury yields aren't up much more than what people thought, because of that large dollar move.
Although the move in treasuries is pretty epic nonetheless. Dennis, really appreciate your joining us today. It's Dennis DeBusschere. He is president and chief market strategist over at 22V Research. And Vonnie, I bring up the dollar because the Bloomberg dollar index up 1.25%. Against the yen, it's up 1.9%. These are massive moves in the FX market.
DXY above 105. I'm not sure when the last time we saw that was. But what's interesting to me is that we still don't know the composition of the House. We know that the Senate has flipped. But, when we finally know the composition of the House, will that change anything for this market that's obviously ebullient today?
Right, absolutely. The House is critical when it comes to approving any kind of spending policy, spending laws. And of course, that is our focus as we count you down towards the close. Full market coverage begins right here on Bloomberg Television.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Vonnie Quinn here with you to take you through the closing bell. We've got a global simulcast, and of course, we want to say hello to Carol Massar and Tim Stanovic, and hello to our Bloomberg Television, radio, and YouTube audiences worldwide to consider the movements that we've seen in equities and bonds on the day after Election Day. What a massive rally, Carol Massar.
Yeah, we haven't seen these numbers in some time, and we're holding on our gains as we are in the final few minutes of the trading, and fairly broad-based, but 2.5% higher on both the S&P and the NASDAQ 100. Whether you care or not about the Dow, it's up 3.5%. But risk trade, Trump trade, whatever you want to call it, it is definitely on today.
I'm not going to take away, I don't know if Vonnie or Scarlett is doing the bond market today.
No, you should go there anyway.
I got to go there.
You got to go.
I got to go there because we're seeing an interesting...
Part of the Trump trade.
Yeah, we're seeing an interesting move play out in the bond market, especially toward the long end, the 30-year up 18 basis points right now, but yields up across the curve. Perhaps some concern about maybe persistent inflation if some of the president-elect's policies get put into place.
Well, I don't know, but I just saw Bitcoin pop higher above $76,000 a coin. So just coming up to the close, even though Bitcoin obviously is a 24-hour trading vehicle, but there's so much ebullience out there. When will it stop?
And you also look at the VIX, right? There's a lot of talk about how once we got the election outcome, volatility would drop. And it's dropped like a stone. The VIX is currently hovering just below 16. And that was from above 20 yesterday. And people are talking about implied volatility really calming down, the VIX curve normalizing in the aftermath of the election outcome. And there you have the closing bells. Banner day for the equity market here. The Dow Jones Industrial Average, whose composition will change tomorrow because NVIDIA is going in and Intel is coming out, gaining 3.6%. The S&P 500 adding 2.5%. Big move there. And the NASDAQ climbing almost 3% on the day. And the Russell 2000, the winner of the bunch, gaining almost 6%.
All right, guys, let's get to it because Qualcomm just crossing the Bloomberg terminal. 2 red main headlines. Let's get to it. Company with the outlook sees first quarter revenue 10.5 to 11.3 billion. The forecast on the street was 10.54. So some upside, tremendous upside there. And they are approving a new $15 billion stock repurchase plan. So interesting right now, you're seeing the stock unchanged, which I am scratching my head. There you go. It's up 6% here. And you got to look at, when you've got something like that, outperformance in terms of the outlook, and then also a buyback. Keep in mind the stock's already up about 18% year to date, but it's going to be building, Tim, big time on that gain. Now up about 7.5%, almost 8%.
Yeah, let's look at some more of these headlines. The company sees first quarter revenue revenue, $10.5 billion to $11.3 billion. Estimates were at the lower end of that at $10.54 billion. As you mentioned, Carol, the company board approving a new $15 billion stock repurchase plan. Fourth quarter adjusted earnings per share also coming in above estimates at $2.69 versus $2.56. And fourth quarter adjusted revenue also coming in above estimates, $10.24 billion. Estimates are for $9.91 billion. Stock up right now 10% in the after hours.
Well, what's interesting as well is that Qualcomm is saying China's sales of Android-based phones increased 40% in the fiscal year, which ended at the end of September. And that's interesting because we have been waiting to see this rebound in smartphone sales in China. And we didn't really get it when Apple reported. And now it seems like Qualcomm is giving a rosier picture on those smartphone sales.
One thing to keep in mind, of course, is that Qualcomm's main business really is phone-related chips, but it is pushing deeper into the automotive and computing sectors. And to that end, revenue of chips used in vehicles jumped to 68% in the quarter, whereas phone-related sales increased 12%. So the rate of change there for the vehicles business is really climbing ahead of that of phone-related sales. And it brings me to my next point, which is, does Qualcomm move ahead with any kind of plans to purchase Intel, as there had been reports that it would, depending on who would be in the White House?
Sounds like a question maybe on the call with analysts.
Yes.
We'll see whether or not we get it. Hey, guys, we'll continue to watch Qualcomm, now up about 10.6% in the aftermarket. Let's get to, I think we should do ARM. Yeah, let's do ARM Holdings, just crossing the Bloomberg terminal, Tim.
Yeah, ARM, getting a couple redheads here. ARM Holdings second quarter total revenue coming in at above estimates at $844 million. Estimates were for $810.9 million. The company sees third quarter revenue coming in between $920 to $970 million. The estimate was for just in that range at $951 million. The company does see third quarter adjusted operating expenses coming in at about $525 million. That's below what analysts estimated. Once again, the top line, second quarter total revenue, $844 million, beating estimates of $810 million. We're seeing shares move lower by about 2.3% in the after hours.
Yeah, and some of that may have to do with, this stock is up about 90% year to date. And so investors are like, show me the money, show me the results. And maybe it's not living up to the expectations, because you've got ARM Holding now down about 5% lower here in the aftermarket. The company's still saying it sees fiscal year adjusted EPS of $1.45 to $1.65. Bit of a range, if you will. The estimate is for $1.56. So just maybe some, disappointment, Vani, in terms of how much this stock has run here this year.
Yeah, it's been one of those really volatile stocks all year. But as you say, Carol, a 90% run up, and it is valued at 76 times estimated earnings. So you really have the analyst community much more mixed on ARM than you do, say, on an NVIDIA or what have you. ARM obviously much tinier, makes, way fewer chips when it comes
smaller
to
companies,
revenue.
smaller sales.
Yeah, exactly.
But it makes NVIDIA look cheap by contrast, right?
Exactly.
76 times estimated earnings. NVIDIA trades at 37 times. NVIDIA being a bargain is already just a mind meld. Again, ARM Holdings down about 4%. I'm not sure it gives us as much a read into the chip sector, which has really shown some mixed reports as it does about ARM specifically, given the run up in the stock.
The company did say in a press release that over the past 12 months, increasing adoption of ARM tech has driven strong licensing revenue growth. Demand for AI everywhere is increasing the need for more compute, and in turn, driving our partners to make long-term commitments to more and more powerful, energy-efficient ARM technology. The company goes on to say that demand for those so-called CSS systems, compute subsystems, has been higher than expected, and it's also contributing to license growth. Royalty revenue growth has also been very positive.
All right, back to Qualcomm we go, folks, because it's up about 8.8% here in the aftermarket. Not seeing the stocks necessarily go higher in the aftermarket, but Qualcomm rather certainly is. Again, it's a sales outlook beat. It's that $15 billion buyback plan. And again, just a reminder of that outlook. First quarter revenue, they're looking for $10.5 to $11.3 billion, easily surpassing what the street was expecting of $10.54. So that explains, Scarlett, why you've got such a big bump here in the aftermarket.
Yeah, definitely. Let's also take a look at Lyft, because that company out with results. Third quarter seems to be a beat, whether it's on the revenue line or the bottom line. Revenue of $1.52 billion, exceeding the average analyst estimate of $1.44 $1.4 billion. In terms of the full year outlook, Lyft sees fourth quarter gross bookings at about $4.28 to $4.35 billion. Analysts were looking for somewhere in the neighborhood of $4.23 billion, so that is also a better than expected outlook. Free cash flow for the full year of 2024 is expected to exceed $650 million. And look at the reaction in the stock price right now in after hours trading, up 16% right now. Of course, this is a stock that has dropped about 4% so far this year, so it was in need of some good news, and perhaps the bar was a little bit lower for that.
All right, so Lyft up about 16%. Let's go to Zillow. What we're getting, let's get right to the outlook. Sees fourth quarter adjusted EBITDA 90 to 105 million. The street estimate is for 102.2 million. We're seeing Zillow up about 1.6% here in the aftermarket. Fourth quarter residential revenue 364 to 374 million. That's a little light. The estimate is 375. And again, fourth quarter revenue. So again, to the outlook at Zillow, 525 million to 540 million. The estimate on the street is 531.6 million. So again, you're seeing Zillow investors liking what they hear. The stock is up kind of flat on the year, up about 2% year to date, but up another 2%, now up about 5% here in the aftermarket.
Bouncing around.
Yeah, exactly. Keep in mind, 10% of the float is shorted. So if you get a little bit of some optimism, maybe investors are doing some short coverage.
Yeah, Zillow CEO Jeremy Waxman saying that 17 total revenue growth year over year, says that they had another strong quarter. Proud of how they're executing their strategy to serve renters, buyers, sellers, agents, and the broader residential real estate industry. They're continuing to invest in tech solutions to build the integrated transaction experience consumers demand and deserve.
All right, guys, certainly a couple of names, and those big chip ones are chip related. We're going to keep an eye on. Again, Qualcomm up about 7.5% in the aftermarket, and keeping an eye on ARM Holding as well, which is down about 2.6%. So some earnings here on this Wednesday. All right, guys, that's our cross-platform coverage. Radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
All right, let's continue to take a look at shares of Qualcomm and ARM, which are moving in the after-hours trade. We'll start with Qualcomm surging on the back of those better-than-expected results and the plan to buy back shares, while ARM Holdings lower by about 2.5%. We want to bring in now Angelo Zino. He is senior equity analyst at CFRA for a little bit more context on what we're seeing with these companies. And Angelo, welcome to the close. I want to start with Qualcomm. And Vani was telling us earlier about this rosy forecast from Qualcomm, particularly when it comes to sales in China, the smartphone market rebounding there, and Qualcomm's outlook for China, sales of Android-based phones increased 40% in the fiscal year. 40% for anything in China is eye-grabbing.
Yeah, no, and thanks for having me. So you kind of look at, how Qualcomm has performed kind of all across the board. And for this quarter, I mean, definitely the numbers were strong here. Top line, I think, grew about 18%. We were looking for about 15% growth. And, that translated to better than expected earnings. But to your point, the performance that they're seeing on the Android side of things, kind of inside of China, clearly we're seeing a nice recovery on the smartphone China side of things here this year. Qualcomm is definitely well penetrated and also on kind of the higher end of the market there. So they are kind of seeing a more favorable mix towards some of these premium type devices out there. As you kind of look at some of their next gen Snapdragon offerings out there, they are kind of coming with more AI capable, kind of these MPUs attached to them. So they are getting more content attached to more and more of these high end premium devices on the Android side of things specifically. So that recovery that we're seeing here in 2024 definitely helping the company out here. Yeah, and of course it gets the lion's share of its revenue from these phone-related chips, but at the same time it is building out the automotive market as well, and it looks like the sales of chips used in vehicles jumped to 68% to almost $900 million. Is that a business that could grow as large as the phone-related chip sales? That's a great question, and listen, I think when you kind of look at Qualcomm here, they've really got two issues at hand, right? They're going to lose a lot of Apple business likely here over the next 3 years or so, because Apple is kind of developing their own internal chip that's going to replace that of what Qualcomm is developing for them. And then also kind of there is high risk out there in terms of on the China side of things, despite the fact that Qualcomm is doing very well in China. So when you kind of think about the need here to diversify, it's extremely important. They have an analyst day on the 19th. On November 19th, we are going to get a lot of details in terms of their diversification strategy. automotive, Internet of Things did very, very well this quarter, despite the fact that when you kind of look across the broader semiconductor industry, you've seen a lot of challenges. So they are, definitely taking some share there. The question is, what kind of business are they winning on the automotive side of things? We're hoping to get more clarity on that side of things on the 19th. But yeah, I mean, this has the potential to be an absolutely enormous business. They are kind of, they've generated a very, very good pipeline here over the last couple of years.
So, Angelo, does the prospect of a Donald Trump presidency bring back into the conversation at all a potential Intel acquisition?
I mean, that's a tough one. I mean, when we kind of look, just even though you've kind of seen some nice gains here out of Qualcomm after hours, and it definitely boosts their market cap a bit here. That's a tough one to kind of gobble up if you're Qualcomm. I mean, in terms of kind of how dilutive that is going to be for shareholders out there, I still find it to be a pretty big reach for Qualcomm to go out there after Intel. I mean, listen, a Trump presidency probably helps the situation if Qualcomm were kind of realistic about this. But that said, you're still going to need approval from China, and I just find that extremely difficult to get in my view. So I don't know if necessarily this kind of changes the whole kind of potential Qualcomm actually realistically being able to complete an acquisition of Intel at this point in time for a number of reasons. One, regulatory, two, does it make financial sense for Qualcomm? But stay tuned. We'll see.
Angelo, just broadening it out a little bit, in your coverage universe, does the Trump presidency have major implications? What's the biggest one?
Yeah, I mean, there are a number of implications when you kind of think about kind of the Trump presidency here. I mean, we definitely saw kind of on a broader perspective, we saw chips do fairly well today. And, I think, when you kind of think about, what Trump does here, I mean, clearly from a cyclical perspective, he kind of helps the semiconductor trade out there in terms of a better kind of tax landscape out there, just kind of, overall kind of better sentiment in terms of the cyclical trade. So, it's good from that perspective. The tariff situation is a wild card out there. I think that the kind of the overarching sentiment out there is it's going to be used, more for, trade tactics out there. But there's a lot of moving parts here as far as the Trump situation is concerned. I'd say on a net basis, it is a positive, but I think there's going to be kind of a lot of gyrations that you're going to have to sit through if you are an investor on the semiconductor side of things over the next 4 years.
Angelo, you also cover ARM, and that company's stock is moving lower in the after-hours trading after the chip designer gave a disappointing sales forecast for this quarter. Compare and contrast that with what we heard from Qualcomm.
Yep. So, we do have a buy recommendation on Qualcomm, a hold on ARM. And a big reason for that is just the valuation disconnect. When you kind of look at Qualcomm, it's about 12 times on our 2026 estimate. When you look at ARM, it's trading it's an extremely full valuation, about 16 times our 2026 estimate. So the bar was extremely high going into the print. They didn't necessarily, I think, meet kind of the high expectations going into it. When you kind of look at the fundamental picture here for ARM, I'd say it definitely is, the visibility there is much better here over the next couple of years. Whether we're talking about some higher value offerings on the smartphone side of things, which they're benefiting from, whether it be kind of, greater licensing type revenue from kind of more AI capabilities in the data center, not only, and not to mention the Internet things over the next couple of years. There are some kind of really nice, strong tailwinds for this company here over the next couple of years. Even AI PCs, potentially 50% of the market being kind of ARM-based here 3-4 years down the road. So, the tailwinds are definitely strong, but when you kind of look at the valuation disconnect here between ARM and Qualcomm, that's why we continue to be on the sidelines with this name. And the company, at least from what we've seen initially, didn't put enough out there to really kind of get investors excited.
So what would you want to ask the CEO, Rene Haas, in the earnings call that he hasn't really addressed, given that they didn't want to give too much of a forecast or say too much about it?
Yeah, listen, I think as far as kind of this company is concerned, the top line is there. The momentum is going to be there over the next couple of years. I think, if we're an investor at this point in time, you kind of want to see, what the kind of earnings leverage is going to look like here over the next couple of years, and whether or not kind of it can meet some of those high expectations out there. But the trajectory of how some of these kind of markets are going to play out on the data center side of things, on specifically on kind of this industrial revolution side of things, I think could potentially take longer than some people out there think. And, maybe, that's what's going to cause, the pullback here to potentially get even, more pronounced over the next couple of weeks.
All right, good stuff. Angelo, really appreciate your joining us and giving us the instant analysis on Qualcomm and ARM. Angelo Zino is Senior Equity Analyst at CFRA. And of course, those are not the only two companies that reported in after-hours trade. We also have Zillow and Lyft reporting results, and those stocks are moving to the upside. I'm going to start with Lyft, Fani, up almost 18%. And of course, this is a stock that has underperformed, has really lagged behind in 2024. Fourth quarter gross bookings beating analyst estimates, so that strong outlook, thanks to record trips, is driving that stock price higher.
And Zillow as well, higher by almost 6% now. Beat estimates. Rental listings made up for home sales, apparently. That's the core business, which is selling marketing services to real estate agents. That had been under pressure, of course, since higher interest rates had depressed home sales back in 2022. But the company did generate $405 million in revenue through its residential business. Tough business to be in these days, especially if you don't know whether the Federal Reserve is headed for a soft landing or a hard landing, or where interest rates are going to be, given how these rates have moved since we got last night's results.
Yeah, especially we know the Federal Reserve is on a rate-cutting campaign, but if you look at treasuries, those yields have only moved higher.
But isn't it interesting how much investors are still prepared to reward companies that beat, even as we saw so much cash come off the sidelines today, Scarlett?
Is it cash coming off the sidelines, or was it just people kind of moving money around? That's another question.
That's a good point, parking their money until we knew the outcome. But, we still don't have the full outcome. We have, obviously, most of the Senate, and we have the presidency. We don't have the House yet.
We don't have the House yet. So to that end, let's bring in Kelly, Leinz, and Joe Mathieu. They are the co-hosts of Balance of Power. And, of course, they've been up for the last, 48 hours covering the election. But, Kelly, just give us a roundup of what we know about the House and how far away we are from knowing the makeup of the House.
Well, there's really going to be just a handful of calls we have yet to get, a lot of them coming from the western states that could decide the majority, but it is not looking decisive either way as to whether or not Republicans can hold on to that majority or Democrats are able to flip the chamber. But given what we have seen with the Republican turnout at the other levels and the other areas on the ballot, with a flipping of the Senate, some of those seats still too close to call as well, but this is going to be a Senate majority larger than just 51-49, though Democrats today have been able to hold on to seats in Wisconsin and Michigan. And of course, overall at the presidential level, we do not yet have results called for Nevada, Arizona, and Alaska. Those together would mean 20 more electoral votes for Donald Trump. He is leading in those states right now, and that would put him well over 300 electoral votes. This was a decisive victory for him. He could clean sweep all 7 of the battlegrounds.
Right, exactly. And then just in general, not quite a red sweep perhaps, Joe, but very, very close.
Pretty darn close. I think our colleague Romaine Bostick, no stranger to this program, called it a red awakening, which I think is the way a lot of Democrats feel this morning, saying they went to bed last night thinking they lived in a different country, because we saw constituencies that would typically favor the Democrat in many cases warm up to Donald Trump. Not overwhelming, but when you see young black men, for instance, voting for the Republican in this way. Latino families, by the way, broke almost down the middle, despite all the hubbub after Madison Square Garden and the amount of time we spent talking about garbage last week. This is the reality of the situation. And if this is a real sweep on Capitol Hill for Donald Trump, we're going to be having a real conversation about reforming the tax code, about extending the Trump tax cuts in a way that we would not have otherwise.
And of course, we are showing you a live shot right there of Howard University, where Kamala Harris, the vice president, is expected to address the public and give some public remarks any moment now. And we'll bring you there live when that does happen. But Kailey, we know that the vice president did make a phone call earlier this afternoon.
Yeah, she has called Donald Trump and conceded privately, congratulated him on the victory. I would point out President Biden has done the same, inviting him to the White House, both of them talking here about the peaceful transition of power. What we're about to see at Howard University is a very important part of the American democratic process. We did not get this in 2020. Donald Trump never actually conceded his election loss to Joe Biden. Kamala Harris is about to admit here publicly to the people who had been gathered at her election night headquarters in many instances last night, hoping to celebrate her, to say that she did not win, this race. And of course, we'll watch over the coming weeks to see this actual transition process unfold, keeping in mind the electors will actually cast their votes in state capitals on December 17th. Congress will certify the results on January 6th. Donald Trump set to be inaugurated on January 20th. But concession is not something we can always take for granted, as we learned 4 years ago, but we are going to get it today.
Well, and Joe, I mean, that was one of the messages of the Harris-Walz campaign. Don't get complacent. We need to, knock on doors right to the bitter end. They outspent the Republicans.
Yep.
What were the lessons that should be learned for the next round of Democrats? I mean, was it something to do with the, vice presidential candidate pick, or was it something else?
It's probably a lot more than that, and a much bigger conversation that needs to happen. And it'll probably take a lot of years for Democrats to restructure the party in a way that they think can take advantage of the current demographics. But these are tough questions, and it's going to take some time to unpack what happened here. There are questions, yes, about the choice of running mate. With Josh Shapiro, the governor of Pennsylvania, had a different impact. We didn't get a lot of people to say yes to that question today, though. This had to do much more with broader messaging. The fact that Kamala Harris decided to turn into the threats against democracy, for instance, as opposed to striking that theme every day on the economy. Not to mention the joy, quote unquote, we heard so much about, or the vibes at the DNC, at the Democratic National Convention. Things got pretty chippy after we came out of Chicago in August, and this was a pretty ugly campaign with a lot of tough rhetoric here. I'm not trying to draw an equivalency in the language that the two candidates were using, but I think the idea is that Democrats could do a lot better talking about the price of gas and eggs than the future of democracy.
Yeah, they kind of ran away from the whole inflation discussion completely. Joe and Kailey are sticking with us, but I do want to bring in Romaine Bostick, the anchor of The Close. And of course, he's been reporting in the field for us during this election season in Detroit. Romaine, you were credited with describing what we saw this morning as a red awakening. What are you hearing out in Detroit that really backs up that idea?
The idea, quite frankly, that the Harris campaign did not do a good job of addressing the issues that were most prominent for voters. I think Joe just hit on this a few seconds ago here. The idea that she really thought abortion, reproductive rights would be a big thing. She really thought some of the other issues as well would also be a big thing. But at the end of the day, it really was about inflation. And to a large extent, it was also about the situation in Gaza. And I just want to rattle off a couple of numbers for you. And I'm just going to look at my notes here because I want to make sure I get these numbers right. In Dearborn, Michigan, which is just to the west of where I'm standing right now, a population that identifies 40% of that population as Arab American. Joe Biden won that city by 70% of the vote in 2020. Kamala Harris lost Dearborn last night with just 36% of the vote. Trump got 42% of the vote. And get this, Jill Stein got about 20% of the vote. In Dearborn Heights, where 25% of the population there identifies as Arab or Muslim, also went the similar way. Biden won that by a large margin in 2020. Kamala Harris walking away with 38% of the vote this time around, Trump with 44%. And Hamtramck, which has 60% of its population that identifies with the Arab American and Muslim diaspora, Harris actually won that, but with 46% of the vote, and that compares to a whopping 85% of the vote that Biden got there in 2020. And I point that out because the comparisons of why Harris lost has less to do with the comparison between her and Trump, but really the comparisons between her and Biden. I had a chance just a few minutes ago to catch up with the mayor of Detroit. And one thing that he said to me, guys, he really said that Biden in his prime would have won this election.
Wow, so many questions to be asked, but Romaine, it's so correct. After the DNC, it did seem like perhaps Kamala Harris was going to break a little bit more with Biden, particularly on issues like Israel's war on Hamas and so on. Could she have done that? Could she have stepped out of the shadow of Biden more?
Well, she tried. I mean, she definitely tried. I don't think anyone could say that she didn't. The problem was, I guess, maybe she didn't try in the right way.
Romaine,
think about it this way. Trump came here to Dearborn.
Romaine, I'm sorry, I'm just going to jump in right now because we see the vice president coming out and she is waving to the crowds right now. This is again at Howard University where she is going to deliver some remarks to the public. This was her campaign headquarters as well. Kamala Harris, the current vice president, getting ready to address the nation. Let's listen in.
Good afternoon. Good afternoon. Good. Good afternoon, everyone. Good afternoon. Good afternoon. Good afternoon. Thank you all. Thank you, thank you. Thank you, thank you. So let me say, and I love you back. And I love you back. So let me say, my heart is full today. My heart is full today, full of gratitude for the trust you have placed in me, full of love for our country, and full of resolve. The outcome of this election is not what we wanted, not what we fought for, not what we voted for, but hear me when I say, the light of America's promise will always burn bright. As long as we never give up and as long as we keep fighting. To my beloved Doug and our family, I love you so very much. To President Biden and Dr. Biden, thank you for your faith and support. To Governor Walz and the Walz family, I know your service to our nation will continue. And to my extraordinary team, to the volunteers who gave so much of themselves, to the poll workers and the local election officials, I thank you all. Look, I am so proud of the race we ran and the way we ran it. Over the 107 days of this campaign, we have been intentional about building community and building coalitions, bringing people together from every walk of life and background, united by love of country with enthusiasm and joy in our fight for America's future. And we did it with the knowledge that we all have so much more in common than what separates us. Now, I know folks are feeling and experiencing a range of emotions right now. I get it. But we must accept the results of this election. Earlier today, I spoke with President-elect Trump and congratulated him on his victory. I also told him that we will help him and his team with their transition, and that we will engage in a peaceful transfer of power. A fundamental principle of American democracy is that when we lose an election, we accept the results. That principle, as much as any other, distinguishes democracy from monarchy or tyranny. And anyone who seeks the public trust must honor it. At the same time, in our nation, we owe loyalty not to a president or a party, but to the Constitution of the United States. And loyalty to our conscience and to our God. My allegiance to all three is why I am here to say, while I concede this election, I do not concede the fight that fueled this campaign. The fight for freedom, for opportunity, for fairness, and the dignity of all people. A fight for the ideals at the heart of our nation. the ideals that reflect America at our best. That is a fight I will never give up. I will never give up the fight for a future where Americans can pursue their dreams, ambitions, and aspirations, where the women of America have the freedom to make decisions about their own body and not have their government telling them what to do. We will never give up the fight to protect our schools and our streets from gun violence. And America, we will never give up the fight for our democracy, for the rule of law, for equal justice, and for the sacred idea that every one of us, no matter who we are or where we start out, has certain fundamental rights and freedoms that must be respected and upheld. And we will continue to wage this fight in the voting booth, in the courts, and in the public square. And we will also wage it in quieter ways, in how we live our lives, by treating one another with kindness and respect, by looking in the face of a stranger and seeing a neighbor, by always using our strength to lift people up, to fight for the dignity that all people deserve. The fight for our freedom will take hard work, but like I always say, we like hard work. Hard work is good work. Hard work can be joyful work. And the fight for our country is always worth it. It is always worth it. To the young people who are watching, it is... I love you. To the young people who are watching, it is okay to feel sad and disappointed, but please know it's going to be okay. On the campaign, I would often say, when we fight, we win. But here's the thing. Sometimes the fight takes a while. That doesn't mean we won't win. That doesn't mean we won't win. The important thing is don't ever give up. Don't ever give up. Don't ever stop trying to make the world a better place. You have power. You have power. And don't you ever listen when anyone tells you something is impossible because it has never been done before. You have the capacity to do extraordinary good in the world. And so to everyone who is watching, do not despair. This is not a time to throw up our hands. This is a time to roll up our sleeves. This is a time to organize, to mobilize, and to stay engaged for the sake of freedom and justice and the future that we all know we can build together. Look, many of you know I started out as a prosecutor, and throughout my career, I saw people at some of the worst times in their lives. People who had suffered great harm and great pain, and yet found within themselves the strength and the courage and the resolve to take the stand, to take a stand, to fight for justice, to fight for themselves, to fight for others. So let their courage be our inspiration. Let their determination be our charge. And I'll close with this. There's an adage an historian once called a law of history, true of every society across the ages. The adage is, only when it is dark enough can you see the stars. I know many people feel like we are entering a dark time, but for the benefit of us all, I hope that is not the case. But here's the thing, America, if it is, let us fill the sky with the light of a brilliant, brilliant billion of stars. The light of optimism, of faith, of truth, and service. HU. And may that work guide us, even in the face of setbacks, toward the extraordinary promise of the United States of America. I thank you all. May God bless you, and may God bless the United States of America. I thank you all.
And that was Vice President Kamala Harris delivering remarks from Howard University, her alma mater, also the site of her campaign headquarters. She says that she congratulated President-elect Trump on his victory and that she will help the president-elect with the transition of power. I want to bring back to our program Bloomberg Balance of Power co-hosts Callie, Leinz, and Joe Mathieu for a little more context on all of this. Joe, we heard from the vice president. It was about an 11-minute speech. She talked about how the outcome is not what we wanted or what we fought for, but she said she will continue the fight. Do we know in what capacity? Because she's out of a job in January.
Yeah, that's unclear right now. And she said a lot of things you clearly have to say when you're dropping out. We should note that the video images we had of people in that crowd showed a lot of young women crying. It was a very emotional 11 minutes with Kamala Harris. I have to admit, it reminded me less of Hillary Clinton's concession speech in 2016 and more of Clinton's concession speech in 2008 when she lost the primary to Barack Obama. And it was a couple of days later she gathered people in Washington for a speech like this that the campaign had some time to work on, had time to frame, and was careful with language to help promote and preserve her legacy to either fight again or have at least a stake in the ground in the history of that campaign. And it felt a lot more like that to me today at Howard University.
So true, Joe. I really felt, Kailey, didn't it, like there was a lot of innuendo there? There was a lot of stuff that was not said. I mean, if Donald Trump, and it looks like he won all of the swing states, is the president, then America is not ready for a different kind of president, and we don't know when America will be. Is that what she was trying to say?
Well, she did not make direct references to what a historic nature her presidency would have brought, as we saw Hillary Clinton do in 2016 when she talked about the fact that she did not shatter that highest glass ceiling. There were really no allusions to gender in this speech at all. She instead talked about a fight that she sees as not yet over. And we should underscore the most important part of this entire speech is that it was a concession speech, something that was missing 4 years ago. And she said one of the key principles of democracy is accepting the results when an election is lost. And she's described that principle as something that distinguishes democracy from tyranny. So that we shouldn't lose track of here. But when she talked about the idea that she is not conceding the so-called fight that fueled her campaign, then going on to say sometimes the fight takes a while, that doesn't mean we won't win. That could potentially be a sign that there still is more to come in her political future. 2028 is 4 years away. That isn't an incredibly long time in American politics, though a lot could change in 4 years. So we'll have to see her next steps. And if that also is in some ways a suggestion that the fight for a female president of the United States is one that ultimately will be won as well.
All right, fantastic insight there. Callie, Leinz, and Joe Mathieu, Balance of Power hosts, and of course they will be back at the top of the next hour. But this is the close, and we do want to give you a quick recap of how markets closed on the day. Euphoria over the election results, at least in the equity market. You can see there the S&P 500, biggest rally since November of 2022, and in fact, its best post-election day ever. And the Russell 2000, an even better performance, up almost 6%. Yields surging. The sell-off in treasuries continue, mainly as analysts tell us on the reflection that they see the economy growing faster. And Bitcoin, which Vani has pointed out, is a proxy for the Trump trade, climbing almost 10%. This is the close on Bloomberg. Donald Trump is headed back to the White House. He took key swing states, Michigan, Pennsylvania, and Wisconsin, among others. Let's go now to our own Romaine Bostick, who has been reporting on the ground in Detroit, talking to folks who are, of course, in the limelight, who have been leading efforts across the state to get more voters out there. And Romaine, you've talked with a number of people. What did you learn? What stuck out the most to you now that we have the outcome, and the outcome came a lot earlier than anticipated?
I think there was some disappointment. Remember, I'm in this Wayne County, Michigan, Detroit City specifically here. This is a Democratic stronghold. So there was definitely a sense of disappointment here that the Harris campaign did not run a better campaign. But there was also a bit of resignation about this idea that it wasn't just so much that Harris ran a bad campaign, but it was that Trump actually ran a relatively good campaign, or at least one that connected with a lot of folks. If you remember, Scarlett, Trump spent a lot of time here, as did Harris, but Trump came here in early October. Remember, that's when he made the disparaging comment about Detroit kind of being a heck hole, if you will, to sort of clean it up a little bit. I had a chance to catch up, though, with the mayor of Detroit, Mike Duggan, who actually really talked a lot about the revitalization of Detroit over the past few years, particularly since it came out of bankruptcy just about 10 years ago this week. Thank you for joining us, Mayor Duggan. Of course, this is a Democratic stronghold here in the city of Detroit. I'm sure you know that. The outcome of the election last night, decidedly not necessarily what the voters here would have preferred, but at some point, once Trump is inaugurated in 2025, you will have to find a way to work with him, won't you?
Well, it's nothing new. I was here during his last term, and we survived that just fine. And when you're a mayor, you have to work with Republicans and Democrats, whether it's in your state house or whether it's in your capital, and we'll find a way.
Were you concerned at all about some of the electoral results, not only here in the city of Detroit, but Michigan overall, the idea that Democrats did lose a lot of ground in several key races?
You know, people made a decision. We campaigned hard. We ran a good campaign. Really pleased to see Alyssa Slotkin. Looks like she won that U.S. Senate seat. But people of this country didn't like the direction it was going, and it's up to the Democratic Party to recognize the fact that it's our job to represent what people want.
Is there a sense here that something different could have been done that would have made the outcome better?
I don't think this year, Joe Biden in his prime could have won, but you could feel what was happening in the country, and we ran a good campaign. It just, people knew what they wanted and they voted.
Why don't you think, though, that the Democrats' message resonated with voters overall in the state?
We have cultural issues going on in this country, and the Democratic Party, I don't think, speaks to people directly the way they should. But, in Detroit, we have a different kind of politics. It's kind of toxic stuff. It isn't happening at the city level. We got a train station rebuilt because the mayor and the council work together. We work with Republicans and Democrats in the state house. We work with Republicans and Democrats in Washington. And Detroit's thriving because we haven't bought into the toxic politics. And we're perfectly capable of saying Donald Trump won. We congratulate him, and we're going to do our best to develop a working relationship. He promised repeatedly to do all kinds of things to make Detroit better, so hopefully he'll live up to that.
Mike Duggan there. Of course, he is the mayor of the Democratic stronghold of Detroit. And Scarlett, I want you to really keep an eye on him. He is now in his third term, a term that expires next year. He has not actually said if he will run for re-election, but the governor's seat is expected to be open because of term limits. Gretchen Whitmer will not be there, and there's a lot of speculation that Mike Duggan will run for that seat.
All right, fantastic context there and great interview there with the mayor of Detroit. Romaine Bostick on the ground for us in Detroit, Michigan, and of course he will be back with us in New York in the studio tomorrow. Meantime, let's turn now to the rest of the world because Trump's victory has created fresh uncertainty among leaders abroad regarding how his return to the White House will shake up defense and trade ties globally. Our next guest says Trump's victory will heighten geopolitical risks. Joining us now for more is Tina Fordham. She is geopolitical strategist and founder of Fordham Global Foresight in London. So, Tina, one thing that you point out, and I think that a lot of people need to remember, is that this victory by Donald Trump did not take place in a vacuum, right? You've got countries around the world where voters voted out the incumbent. France, the UK, Japan, if not the ruling leader, then the ruling party or the coalition. You talk about how whenever a winning electoral formula appears, it gets copied fast. To what extent was the U.S. election a copy of what we've already seen abroad, or was it a new formula that Trump 2.0 has created here?
Well, this is the postmortem that we're all going to be conducting. It was remarkable to see Vice President Harris's speech, by the way, just moments ago, where she was gracious in defeat, and we now need to see how magnanimous Trump can be in victory, because that tone that is set by the United States and by our democracy, our institutions, and the transfer of power is going to feed back into what I said in my note, which you quoted, about winning electoral formulas being copied. Now, another example of a shock political outcome was Brexit, of course, not anticipated by markets or the polls, but one which nobody ended up wanting to repeat. I think by contrast, what Trump has pulled off is something remarkable. It is a domestic political realignment. And from where I sit, talking to our CEO clients all day today, a lot of questions about what Trump's first moves will be when it comes to global trade, tariffs, and working with the conflicts that have plagued us the last couple of years. We'd like to be hopeful, but any change of this scale is going to translate into more volatility, in my view.
Right. When our editor-in-chief, John Micklethwaite, interviewed Trump just a couple of weeks ago, Tina, Trump implied that he had spoken with Vladimir Putin. He wouldn't say it outright. But he has also said that he would end the war pretty much immediately. Are we anticipating any kind of movement on that come January, and perhaps concessions even from Ukraine in order to make that happen?
Well, Trump has said on numerous occasions, hasn't he, that he would end the war in Ukraine on day one. Now, that isn't going to be possible. Zelensky, the prime minister of Ukraine, has already talked about the need to make concessions. If there's any reason to be optimistic, it's in 2025. It is that diplomacy will probably start to happen. There just won't be a way to replace the U.S. military aid, even if Europe starts to act faster and kind of unfreeze some of those Russian assets to increase funding. But the most important signal on that front, and why we talk about heightened geopolitical risk, is that if Putin is able to, to retain the territory that he's taken by force, that gives a signal not just to Russia, but to other countries that have bits of territory they'd quite like to have back again, as they see it, to do so.
Yeah, one country in the Pacific, for instance. How much do you look to Trump 1.0 as a guide for how he will conduct foreign policy? Or will the second time around be different because his most important criteria for, say, Secretary of State or cabinet will be loyalty as opposed to expertise?
So my sense is that Trump is going to focus on his domestic agenda. At least that's where his personal priorities will lie. In terms of who will form his cabinet and his key appointees, the fact is that there aren't very many of his the previous people in his administration who are willing to join again. So I think Pompeo, Bob Lighthizer, just to name a few, but we will see a lot of jockeying for position going forward. I think one area where Trump can do a lot more is on the Supreme Court. If the two justices retire, Samuel Alito, Clarence Thomas perhaps, Trump will be able to influence the way that the court functions for decades. So there are a lot of ways that he can make a tremendous impact, and his priorities will be something that we are all going to be assessing and evaluating and trying to read the tea leaves on.
And Tina, he did manage to get the endorsement of some high-profile Muslim Americans. What will his policy re-Israel be?
Well, Trump is also quite close to Netanyahu. This is very well known. Again, on the campaign trail, he made a lot of remarks saying that he would let Israel go and finish the job. I think it's Iran that is most nervous when we think about the Middle East about a Trump return to the White House. One development that kind of went under the radar today was the Houthi rebels abandoning seemingly their activities in the Red Sea that have caused so many difficulties in supply chains. And that suggests to me that Iran doesn't want to lose another proxy. So big recalibration going on to see what happens next. Another area where we could start to see a move toward diplomacy would be between Israel and Gaza. And again, in that case, Israel likely retaining the upper hand.
Now, thank you so much. That is Tina Fordham, geopolitical strategist and founder at Fordham Global Foresight. Thank you. Well, now that the presidential election has passed us for the most part, the market focus is shifting back towards the Federal Reserve. We'll get the latest decision on whether or not the central bank continues to cut interest rates and how much. But a new mission lies ahead for the Fed under a second Trump term. How to make the best policies to deal with inflation while maintaining autonomy from the executive branch. Joining us now is Nancy Lazar, Chief Global Economist at Piper Sandler. Nancy, what's changed for the Fed chair, be it Chair Powell or somebody else, in the last 24 hours?
Well, obviously, the sharp rise we saw in bond yields today are sending potentially an inflationary signal. That was really what caused bonds to increase, and they're now up over 70 basis points since the Fed cut rates 50 basis points back in September. So it may slow down the tightening. It may slow down the easing cycle, given the market's concern about inflation. You saw that in '95. Also, bond yields backed up a couple of times in '95 during the Fed easing cycle. And eventually the Fed did stop cutting rates, perhaps because of the rise in bond yields. You've also had signal back in 1980 when Volcker eased very aggressively. The bond market turned up before the Fed started to raise rates. And then you also had it back in 1967. And so there are precedents where the bond market could prevent the Fed from cutting rates as much as they otherwise would have.
Okay, so that's kind of the longer term view, but I'm curious how the Fed will characterize the jobs report that we did get earlier this month, which showed obviously a much, much lower growth rate than had been anticipated.
For the Fed tomorrow, certainly nothing's going to change. They'll cut 25 basis points. Yeah. They don't want to all have give any inclination that the election results changed their decision to cut rates. And you have seen a very weak employment market led down by, in particular, small and medium-sized businesses who have seen net income decline sharply, and compensation costs rose sharply because they had to give such large wage increases. And so your mid space is really where you're seeing weakness in the labor market. And yes, the Fed should react to that, at least for now.
And very quickly here, Nancy, when you look ahead to the news conference, how much do you anticipate Chair Powell to mention or acknowledge the new incoming administration and how they perhaps shape policy?
My colleague Benson, who worked closely with the Fed, says there's no way he's going to have to say anything about the election results in his presser tomorrow. He will keep distance from the election.
Okay, so he won't say anything, but I'm sure the questions will be asked. Exactly.
Yeah.
Nancy Lazar is Chief Global Economist at Piper Sandler. Thank you so much for joining us. And Vonnie, that goes to the point where it can't be avoided. That will be question number 1, 2, 3, and 4.
And remember when Jerome Powell said that they ask ChatGPT to generate questions just to practice? I mean, you know that question has come up even on ChatGPT.
Absolutely. That does it for us on the close. We've got Balance of Power up next with Joe Mathieu and Callie Leinz. Have a great evening, everyone. This is Bloomberg.